So today we're going to be talking about kind of the market direction, and Steve's going to be sharing about where we are with that and the probabilities for where we head next. And then I'm going to be talking about a process, the 7 DTE, or basically any spread adjustment process that you need to go through when one of the legs get threatened. And so with that, I'm going to turn this over to you, Steve. And so you've got it.
Okay, thank you, Al. And for those listening, we're working off of I've got a daily chart up right now. I work on patterns and harmonics and support and resistance. It's very important for me to have a good idea of where we're going, what we're doing, and so forth. So if you see the chart, I'm going to remove a couple of these drawings in here. If you see the chart, this had a big pattern here, and notice it went down. That was very nice, and it was into a wave 4, we believe, or I believe anyway. We came up into here, and this could be a 5, but we've had quite a bit of movement going up here, and we've really stayed up a lot. We went down, had all these heart attack things, and then we've gone up into here. And if you look at this, just to give you an idea, and I'll show a smaller chart on this, we had this area right here as a tremendous, let me draw a line across here. This right here was for a long time. We were beating on it. And in Al's room that we work in and everything, we finally got to this point and said, okay, we are ready to break out of this thing. So we had this marked off as put this in here, give you some reference. We had this marked off as this big box here. Oh. Okay, it needs to expand that a little bit. Anyway, this big box going over to here, and now we're in a big box right in here. I'm not sure why I'm not drawing that. Hang on. Okay, there we go. Now we're in a big box here, and we're going to break out above or below just like we did here. So this gives us a bigger overall picture. So I'm going to erase this. And now we got to figure out where we're at now. I do a lot of support and resistance off of ABCD patterns, and we went over that quite a bit last time. Al has those recordings on there. But if you look at this right now, we've got from this one here up to here, down to here, and this is my big support. It can hit it and break through it a little bit, but it can't stay below it. And with that in mind, this gives me a projection. Let me just draw it out and I'll show you. So from, let's see, right there to here. Okay, so we've got from here to here. Oh. Here to here. Down to here. And these are my projections. You notice this big pattern here is not finished, is not fulfilled yet. It's a big butterfly pattern, and I have it somewhere in these vicinities. I'm fully expecting this to take this high out and go up into these areas unless we break down below this area here. And the first one we'd have to break over is 56. So right now, 56 is my main level, 2956. And then 2944.50 is my next one. Those are the two levels. Now let's try to get down in here quite a bit. We're working on it, but we still have not taken this out yet. We still have not fulfilled this pattern. And we can also go down. We can have a big pattern going down into here, and this is up. But right now, we're just working off of this. So with that thought in mind, let's look at it on a smaller time frame. And we'll see what's going on now and what we look at in these on the days and so forth. We'll put it up on a 5-minute chart. Excuse me for all the movement. It just takes a minute for this thing to catch up. Okay, so now we're looking at a different pattern. We look at from the highs to the low, and this is a big ABCD pattern, which is if you read the you can have the PDF on there. If you read that, you'll see these are big patterns, are important patterns, And every pattern that you're going to find will have an ABCD in it. There is not a pattern out there that does not have an ABCD. And in essence, we have pivots that we look at. So if you notice, we have an A, a B, a C, a D, down here into this 56. Remember earlier I said 2956. And this, I love it myself personally, it goes between the 127, 141 extension, which it did here, and we were off to the races. So let me adjust this now. I'm going to remove a couple of these just so you can see where we're at and the support and resistance levels. All right, so we've got this is our support level right here, and now we look for it to go up. So how do we do this? We can take and run a pattern a couple different ways. From this high to this low, this is the swing until we take out this low or take out this high. We're just going to be inside of this. And you notice we've stayed inside of it. We've stayed inside. We stay inside. So we've got to figure, okay, what do we work with? I don't want to wait till this either takes it out this or this here. So we're going to take this large move down. We also have this one. We're going to look at confluence. So these are our two swings. This particular swing here narrows it down a little bit because this is an A, B, C, D down. And earlier I said I like the C for the support or resistance. So right now, this is the big resistance that's got to break above, or we will never take out these highs. This is close to the high right here. I think it's 29. All right, or we will remove this one. So let's take this smaller swing, and we're going to take this as our main swing, and I'm going to draw a line up to the next high. All right, what does that tell me? Well, let's look at a Fibonacci retracement. Harmonics and Fibonacci's all go together. All right, so this is hit right here. It's not the 618, it's not 786. So I'm going to put and change that 786 to 707. Which is the harmonic number between those two. And that usually hits. What this tells me is I'm going to have a move on the extension probably into 141. But that's unimportant at the moment. I'm just going to tell you there's a reason for all these extensions. I'm also going to run this from this top one here down to here just to see what numbers I've got going. All right, almost to 618. So right now we're going to consider this is a pretty good wall right here, and it has to break above this to go anywhere. All right, so let me remove this one. I'm going to remove everything except that 7.0, so you can keep it in mind for the level we've got there. And now we have to figure out, okay, where do we go from here? Well, we want to take and look at whatever the lowest point is, which is amazing. It just hit right now, this little low. So I'm going to draw this line. Got to get my line back in. I'm going to draw this line to this point right here. And now I've got my structure. I've got two different things can happen. It can go up or it can go down. And of course, everybody's going to say, well, of course, that's what we're going to do. But we have to get an idea and be prepared for both of these. So let me move this over just a little bit. I'm looking at this as either a big A, B, C, and then have it where it goes way down below. Remove these lines right here. I don't want to confuse anybody. So if I'm looking at this, I'm going to take two different methods of looking at above and below. I'm going to take this big one and this smaller one. I'm going to do the small one right now. I'm going to draw my Fibonacci extension line from here to here. And then up to this high. And this does two things for me. It gives me a very strong resistance level that if we stay below there, I'm going to be going short. If we break above it, I'm going to be going long. Where is it going to go? I went A, B, C, and my D point is going to be down here. If it goes down, I'm looking for this to get somewhere in this area, at least here, and possibly down here. If we hit here, it's okay because it's at my 40 level, my 44 level. If it just hits, bounces, and comes back up, then that's giving me a real strong support, and I can still adjust these patterns to go up higher.
And Steve, hey, this is Al. Hey, quick question. This is based on the 5-minute chart, right?
Yes.
Okay. And then when you say ABC patterns, the extension, basically you're noting the Fibonacci extension, right?
Yes, sir.
And the 100 level is based on that extension, correct?
Yes, sir, it is. Yes,
okay.
You're right. I'm not trying to confuse anybody. I know it sometimes be quite hard to follow along. The main thing I'm trying to show is that there's a reason why we pick this level and this level to break out. Right now, for all intents and purposes, let me get my drawing on. This level right here to that which I showed earlier on a smaller level, it's got to break this box one way or the other. That's all it amounts to. Right now, you can trade within here, but you got to watch these areas. You can do all types of spreads and different things if you want to, and there's nothing wrong with that. But I want to, as we narrow this down, I want to show you a couple interesting things here. So this is our low. If we go back up, what is my expectation to go up? Well, if this breaks, I'm going to take it from this. Let's do this first line here. I'm going to run this down to here where I have my Fibonacci retracements. It's hit the 707. If it comes up and moves above this, here's going to be my target, the 100, then the 127, and in between here is my big target. This is really where I'm expecting it to go to unless we start breaking down into here. Then I'm going to reverse everything. Once we get below and stay below this 4450, my whole viewpoint is going to be we're short unless we get back above it again. So these are the levels we're going. So we're looking at somewhere probably up into 30 area, 30, 35, 30, 40, down to possibly 29, 30, 29, 20, somewhere in those areas. Those are very realistic. If you keep those on your chart and remember them, it'll help you keep an idea of where we're going.
Yeah, and the great thing about this too is that because we're mostly credits traders basically. While this market is congesting, we're just writing 7 DTE trades just over and over and over again, just ringing the register on this thing, you know.
And so, that's the beauty of it. Yes, I agree with you completely. I'm sorry, I didn't want to interrupt you. I'm just agreeing with you.
No, yeah, go ahead. I just wanted to mention that because there's a goodness about consolidation in the market, you know, when it happens, and typically it happens 80% of the time. So we're moving up or down 20% of the time, and we're consolidating about 80% of the time.
Absolutely. You have expansion and then you have consolidation.
Right.
Expansion and consolidation. That's what you've got.
Yep.
Here we see an example. This is the expansion, and now we got this consolidation. That could lend itself to going down very easily. This market can go down really easily.
Yep.
But let's take it over here now a little closer and remember these marks and so forth. And let's look at last night and today and what we're doing. Now we're going to look at, we're within that box. Let me move this up just a little bit. We're within that box, and now we have to figure out, well, what do we do with this? How do we trade? How do we do whatever? All right. Pivots are extremely, extremely important. You're not going to move anywhere without taking a pivot. We're on a 5-minute period. Let me change this to 15-minute for a minute.
And Steve, can you explain what a pivot is?
Oh, sure.
Mm-hmm.
I'm sorry. I should never assume something like that. All right, excuse me just a minute. My computer just always acts funny for a little bit. Okay, all these lows here and all these highs are a pivot. You can also break down everything high and low as a pivot, and they all are. But I look for these ones that make some kind of a move, and I'm looking for a pivot. In fact, I'll give you an example, and this is how I do a lot of my trading. I watch for this. I look for well, it doesn't here, but I look for different indicators to help. I do more price action and patterns. But for example, let me open this up a little bit. We have a pattern where this went up to here, went down to here, went up to here, and down to here. This is a form of a buy pattern. It's not exactly perfect, but let me widen this out. Spread this out if I can do this right. Not sure I got it where I want it. Okay, there it is. All right, so when it came down below this, and I'm sure if we were to look at it with my other indicators of what I'm looking for, and I don't use indicators like everybody else does, I just look at for extremes. This automatically becomes a buy pivot if this one goes down and back above it. And there's other factors involved. I'm going to try and show you that in a minute. I think there's a place over here I can show that. But you look for that, but you usually get a very big bounce because the place it breaks down is where it wants to retest. So then it goes way back up, and then we get notice this A, B, C, D pattern here.
Hey, Steve, you got a question here.
Okay, yes.
On the screen there.
Oh, yes. That's a very good question, Bo. I look at monthly, weekly, and daily, but I pretty much, once I get my longer periods in, I look at daily, I look at 4 hour, I look at 1 hour, and then I tend to trade off of a 1 minute. And there's reasons why I do that. But the time periods are all going to be the same. Let's look at this. Let me draw a line here, and I'll show you something. I'm going to draw a line from this one right here. All right, let's remember this. It's marked here. Let me put this back on a daily, and we'll see what it looks like. All right. Here's a line I just drew. And you can see here, even on a daily, you have the same thing. You have a pivot there, except you're dealing off the pivots on daily bars. So this went up, it came down, it made a low here. See, that's what we're calling that pivot. It went up, it went up. This is now a pivot. And what did it do? It went down below this. That's the point I'm going to show you on the 15-minute or 5-minute. It went down below this. When it goes back up on a 1 minute, 5-minute, 15-minute, daily, it becomes a very strong possibility you're going to have a reversal there. Notice the next thing that happened. This next day, it went up above this, went up here, did not take out this high. So this is a pivot in this area, but this is the bigger pivot. If this would have cleared above here, then I'd be looking at this as a sharp. There's more to it than just moving below and above it, a lot more. But I'm helping you understand these pivots are very important to watch, and I look at pivots all the time. Here's a pivot right here on the ABCD that we showed earlier. There's that pivot. We had this one go just a little below it, and when it came back up, that was a buy, absolute buy. And many got into that one. I got into it just above it, but that was a very good buy. So pivots are important. Does that help answer your question? Just give me a yes or no typed in, that's okay.
We'll take
okay,
the yes.
I'm assuming yes for the moment. Okay. All right, so let's go back. Let's go back into the time frame that we were in a little while ago. We're in 180 days at 15 minutes. And this gives you a little broader picture that you're looking at. Okay, so now we've got, let me get it over here. Go back to where the pivot was. Now you can see this is the same pivot I showed you earlier on a smaller time frame. When it comes down through it, I'm looking very seriously, and I'll be doing this on a 1 minute chart to see if this makes my pattern. If it does, look at these moves you get. It's very important. Now, do you notice anything from here to here to here to here? We've got a very nice ABCD pattern. Let me just draw that in for you, and I'm going to show you what we do for getting ready for a day like today. You go into here, to that, up to the 100. How do we buy or sell something off of here? Let me spread this out. Let me just do it this way. If I can do it and it'll stay in place. Okay. How do we manage this? How do we do something? We go on a smaller time frame and a smaller pivot area. We make this to here. We come back down. This looks like it's probably a 618, which you want it to be at least that when you start looking at it. Doesn't mean it has to be, but that's what I like to see, at least that. Okay, we got our 618. It's absolutely perfect. No big deal. So that makes it nice. Let me erase this. Now, I will draw in, this is A, B, C, and we get a pot. I'm excited and I'm looking like I've got a line here. My projection is at least to the 100. How do I capitalize on this? Do you notice this point right here? It's the lowest point, then you have high, and then it fell below that. So this is my point I'm going to come back up to, and I'm going to look at that as my buy location. So we're going to take a line just like we did earlier. I don't expect you guys to understand all this, but I want you to see what we're doing.
So it's kind of like the previous pivot prior to the low. Is that correct?
Exactly.
Okay.
Yes. Now you're exactly right. Let me put in another study here real quick. I deal with RSI a lot, and I deal with RSI a lot. I want you to show you something here that I look for as we go down and as we go up. All right, we went down, we came up here, we're down here. Now I want this not only because I want to get, it comes back up there, but notice this RSI. Let me pull it up here. On this line here is my low. You notice that? Does everybody see it? Al, if you see what I'm talking about, you know what I'm saying.
Yep.
All right, it goes up. We've got it up. It comes down below this, and then when it comes back above it, I want to go long. So where's my turn? Notice this one here, the low, even though it comes below it, as it goes up, it doesn't run up above. It does pretty quick, get a nice move, but it gives me a couple minutes. Here I have minutes. That's where we're on 15-minute chart. 15 minutes of time for that to move. I want this to come up above, and what I will do is the last pivot, the same thing pivots here. The last pivot here, I'm marking right there, which just happens to be the low there, and it almost always works out to be that way. The next time it gets violated or moved below and comes up, when this line comes up, I expect it to take this out. Some point along here, as it's above there, it should take it. So what happens? Here, I order in, it goes above it. I'm sorry, it goes above the next bar. I have no pain whatsoever. It comes and retrace. Now, if you want to be real safe, you can do a retrace on it. But I love this right here because what's happened? At 97.25, what's my stop? On a 15-minute chart, 91.25. And I that big of a stop. I personally, I have almost no stop I have to worry about. This is how I found is a way to do this. Move here, a 15-minute move. Let's put this now on a 5-minute. I don't expect you guys to grab, but as you learn and as you're in here and as we do more training, these things will become second nature. I can remember when I first showed this to Al and we worked on it, and Al caught it pretty quick. It was a really, really quick move that he got with it. Okay, so we're back here. Let me move this up. We're on a 5-minute chart. Let's see what we've got here. Okay, now this gives me some structure that I love to have. Here's the pivot line. Here's my low. The next bar goes below that. That can give me a buy signal right there, the same spot, but I'm not going to buy it on this low of a time period. It goes above it. It goes down below it. Then if I want to, on the next move up, I buy it. But notice what happens. I have this move from here, and I've got to have my short at least 3 ticks below this line. So I have it 4 ticks below. It can go 3 ticks below and still match. But look at the divergence. The low right here, let me make sure I've got it right, is 58.50. The low right here is 58.50. So it hit it, but didn't go below it, the 3 ticks. This is a perfect bottoming pattern. I don't typically do it the first time or second time. I like the third hit. So here's 1, here's 2, here's my third hit. And look at that bar. Even though it comes back down, retest it. this is not a big issue. But look at the RSI. Here's the RSI here. The next one is lower. So that's telling me it's going to probably take that out. This one here is lower still yet, but look at this. We've got our divergence. This gets me excited because I'm looking now, I got a good chance for this to come down and make a reversal pattern.
And
So we look at that.
Divergence means that the RSI goes down to a certain level while the market goes down to that level, and then the market may go down further, but the RSI actually stays above the previous low. Is that correct? Previous low in terms of the RSI. Okay.
Yeah, it went lower, but follow with the low. It made a higher low. So this gives me divergence. You don't just trade off a divergence. You trade off of multiple things, but now we're looking at this. It's great if you can trade more, because you're likely to get a very big move on this. This is extremely common to see this. And that's a move of, what is that, 58, 50, 70 to 80, we'll say. So 122 handles. That you can make money at, and you can do it. And by then, I would have been out anyway. I would have been following this up and just let it go out. But we come back down. As long as this doesn't come past this and take it out by more than 3 ticks. But what I love to see here is 88%. Yes. We're going to use our Fibonacci retracement at a low of 58, 50, right in there, up to here. We went through our 786, which is usually a really strong area to hold. I'm going to put in the 886 on. And these numbers are very valuable. They are not just made up stuff. This and over again. All right. Notice what here. It hits at 886 to. This is another thing you can do, and I do this not all the time, but I do it some. When I've got something, a big move, this already told me with the price action, it's going up. But it's always going to want to come retest. You'll find 98% of test, even with this big move. So if I'm into this right here, yeah, comes down in here, right, say 60, get it less than 1 or 2 or 3 handles, you're doing fantastic. I hope you understand what I'm showing you here. If not, watch it again. This is priceless to learn about. Off of your divergence, your RSI. I actually, on a trading chart I do, I have 3 different forms of RSI. Each one does something different. But when they go in unison together, I know I've got a top or bottom pretty close. Okay, but let's go back now to this. Let me go to a 1 minute.
Okay, Steve, we need to start wrapping up a little bit here. So if you can find a place.
All right, we'll stop with that. All right, let me just show you what we're looking for right now. We're looking for a pattern. This right now today, just a little while ago, I walked in just as this was happening, and I did not get to trade it. But you notice this pivot right here went down the same a while ago, not the one we were at there, but the one earlier. Down low and look. Did we make a move up? Did we come off of this pivot? You've got to pay attention to pivots. Pay attention to side. Okay, Al, I'm going to stop here. I've given them a lot to work with. I don't want to confuse them. Where are we going from here?
Okay,
this hole.
Yeah, go ahead.
Hole. We're going up. Did you have something you want to say?
Okay. I'm going to go ahead. Yeah. Can you hear me?
Okay, let me give you. Listen, I'll stop that because this is right now. You look at this. Everybody got that big move.
Steve, can you hear me?
Move down. Everybody probably freaked out. Yes. Can you hear me? Can you not hear me?
Okay. I just want to. Yeah. Go ahead. I'm sorry. Go ahead. Yep. Yeah.
If you notice this A, B, C, D pattern, A, B, C, D, It hit right at the 127. This is nothing to be worried about. It's not, the world is, something happened, I think it was news or whatever. Now, we're this pivot way over here. This is the next pivot. We've already, here's you to watch a trade to watch today. Here's our pivot. Where'd it go? Where'd my pivot go? Okay, here's my pivot. Line. We came down below it, we bottom. We came up. That if we do not take this 3 ticks, a 4th time, 29. $73. Not one of, so please make note of this. With small harmonics, why it's so important. Here's our move down. This is the down to right. We double bottom. Watch, this is going to go past. This is the target buy. This is the target. Unfortunately, this is your stop, but it's above, it's here. And this is how you're going to tell if this one's going to work. The pivot low on this, 21.75. If it gets above that, anticipate the 73 is going to.
Okay. Right.
There, now.
You're breaking. Okay. Looks like you're breaking up a little bit.
You
there,
can
Steve.
watch. You buy, spread.
Alrighty. Okay. Let me change screens here. Okay. All right. I'm going to talk about basically a normal. Thanks, Steve, for doing that. I appreciate that. I'm going to talk about a normal 7 DTE trade, right, and one that required adjustment. And so I'm going to walk through that process. And this happens every so often, probably about 30% of the time, where we need to adjust the trade. And the goal here really is to adjust it without having to, cut into your profit. Ideally, you want to adjust it for a credit, but a lot of times, we end up doing it break even or maybe costing a little bit, right, to make the trade safe. So let's go through this, right? So on 723, basically, I put in an iron Condor, and I legged into that position. It was 30.35, 30.40, and 29.45, 29.40 put, okay? And I received a credit of 85 cents. And so on the very next day, basically the market, jumped up, quite a bit, and it threatened the call side of the trade, right? And so I looked very quickly to see, first of all, if I can adjust the trade within the same expiration period. And so if we can adjust it within the same expiration period, we're not adding risk or adding time to the trade, but keeping it steady. And a lot of times it's hard to do that on the call side. It's much easier to do it on the put side. So if the market was going down, it's typically easier to adjust positions just because premium volatility goes up, premium prices go up, and you have more flexibility in adjustment. It's the call side that kind of gets dangerous. Okay, so in this case, we had to adjust the call side because that was a leg that was threatened. And so what we do, right, and this is the process, you basically you're paying for one side and you're making money on the other side. And you want to stay net positive or break even, when you do that. So the goal there is to take the profit from the leg that is not threatened and is actually profitable, and then give it to the leg that's unprofitable, so that you can rebalance the trade and it stays safe. Okay, so in this case, I rolled the trade up from 335. I rolled it up 20 points, and I was looking. I couldn't do it within the same expiration. It was going to cost too much. So I rolled it out 2 additional days, okay? Instead of the 29th, I rolled it out to the 31st. And so I received, you know, I didn't receive a credit. I paid 35 cents for that roll to move it 20 points higher. Not bad, right? On the bottom side, I didn't want to move that position too much, right? Because you know, typically the markets move down quicker and more aggressively down. So I wanted to give it a little less room, you know, a little less room there. So I moved it up only 10 points, but I did receive a credit of 30 cents for that roll, which was actually pretty good for moving it 10 handles up, right? And so now we had rebalanced, you know, the trade somewhat. It's still a little bit on the top side, but we're giving room to the bottom side in case we have an aggressive move. And so what happened? Basically, the market, after it moved up, it congested. It's a normal process, right? And so the trade, I was able to leave it alone until the day of expiration, which was on the 31st. I closed out the trade basically for 10 cents each. Let's see here if we got that. So for 10 cents each, closing it for 20 cents. So what did we do? Collected the premium of 85 cents. I rolled it. It cost me 5 cents to roll, okay? And so it basically takes away 5 cents of profit, you know, of your position, but it's still profitable, and basically close the trade for a 60-cent profit instead of a 65-cent profit, which I would have traded. But this is how you manage risk in one of these trades to keep it balanced. And at times, sometimes I've had to manage the same trade up or down a couple of times in order to keep it safe. And just to let you know, part of the stress of doing these rolls is actually knowing how to do it with your, you know, with your broker, you know, whoever you're trading with. And so what I would advise is to make sure that you know, before this actually happens, that you understand how the roll process works, and you're able to do that, you know, fluidly, so that you're not, you know, stumbling along trying to make this work when you're stressing out trying to protect your trade. Okay, so you want to practice this and make sure you really understand the roll process, because it can be complicated based on the broker. And actually on the my YouTube channel, I do have a roll that I did on my phone, and showing basically the steps that I took to actually place that roll, do that roll, you know, so that you could see there that you know, basically how to do it with at least think or swim. Okay, so any questions about this, about how to roll, you know, and why you would do it, etc.? You good? Okay. Check out the YouTube in Simple Option Strategies. Again, I have a video there that shows you how to do it on the phone if you're using Thinkorswim. But again, you want to make sure that you're able to do this with the broker that you have. All right. So if there are no more questions, and I think this concludes our Facebook Live today. All right, guys, thanks for attending. Appreciate it. And we'll be here next week again at noon, and we're going to do this every week on Friday at noon. All right, and we'll have a topic to talk about so that you know, this will help you guys in your trading. All right, have a great weekend, all. Appreciate it.